Portillo's Inc. NASDAQ, PTLO, due diligence report date. September 8, 2025. Executive summary: Portillo's is a fast casual restaurant chain built around Chicago-style favorites, hot dogs, Italian beef, sandwiches, operating company-owned restaurants designed as experience-focused destinations. Strategic priority: national expansion using a smaller store, simplified menu rollout. Latest quarter Q2 2025, total revenue $188.5 million, net income $10 million, same restaurant sales modestly positive. Company missed top-line consensus and stock reacted negatively. Market cap early September 2025, $0.5 billion. Valuation multiples are moderate for the casual dining peer set trailing PE mid-teens. PS below 1.0. Investment angle: growth at scale story with operating leverage upside if new, smaller store format and margin programs perform, but execution risk. Unit economics in new markets and margin pressure from labor commodities remain key challenges. 1. Company overview and business model. Founded as a Chicago-based concept, restaurants sell hot dogs, Italian beef, sausages, sandwiches, salads, shakes, and catering. Business model: company-operated restaurants, not franchise first. Focused on consistent guest experience and multi-channel sales, dine-in, drive-through, takeout, delivery. Expansion strategy: reduced footprint prototype to accelerate growth while cutting build and operating costs. 2. Industry and market position sector: fast casual, quick service restaurants. Position: strong regional brand with Chicago heritage and growing national recognition. Differentiator: menu authenticity and experiential dining environment. 3. Revenue streams: restaurant sales, primary revenue driver. Catering and group orders, higher average checks for events. Delivery and digital, orders through third-party apps and in-house channels. Licensing products, small and not yet a material revenue stream. 4. Competitive advantages: strong, differentiated brand identity tied to Chicago heritage. Company-owned model ensures consistent quality and experience. New smaller store prototype reduces capital intensity and speeds expansion. 5. Scalability, national rollout potential via smaller footprint and streamlined menu. Operating leverage through higher volumes, catering, and digital channels. Constraints: real estate availability, labor costs, training, supply chain scale, and regional competition. 6. Financial statement analysis. Q2 2025 quarter ended June 29, 2025. Revenue: $188.5 million, up approximately 3.6%. YoY net income: $10 million, improved year over year. Same restaurant sales modestly positive. Balance sheet and cash flow: capital intensive with ongoing investment in new store openings. Debt and lease obligations are material, typical of restaurant operators. Cash flow usage concentrated on CapEx and growth initiatives. Sensitive to labor, food costs, and occupancy expenses. Smaller store rollout aims to improve returns on invested capital. 7 key valuation metrics approximate: market cap, mid-teens. Price sales, approximately 0.6 to 0.7x. EBITDA, moderate relative to peers. Adjust for lease obligations. 8. growth potential, and TAM. Large U.S. fast casual dining market. Growth drivers. Unit expansion, higher average unit volumes, catering, and digital penetration. International expansion, not a near-term focus. Competitor landscape direct, regional fast casual sandwich, burger, hot dog chains. Indirect, national QSR brands, and local independents. Competitive drivers, site selection, labor management, menu differentiation, and digital adoption. 10. Management and governance leadership team with restaurant operations and development expertise. Governance structured for growth. Management compensation aligned with performance metrics. Board and ownership structure detailed in proxy filings. 11. Risks expansion execution in new markets. Smaller prototype units must deliver strong economics. Inflationary pressures on labor and food inputs. Real estate costs and site selection challenges. Volatility in small mid-cap consumer discretionary stocks. It filled dividends. Shareholder returns, no regular dividend. Focus on reinvestment in new stores and growth.
Buybacks or special distributions, not a near-term priority.
13. Insider and institutional activity. Institutional and insider ownership can impact liquidity and price swings. Monitor SEC filings, 13F and Form 4, for latest updates. 14. Technical analysis and liquidity stock shows volatility around earnings releases. Liquidity modest relative to large cap peers. Average daily volume should be reviewed before trade sizing. 15. Recent analyst ratings and news analysts cautious after Q2 2025 revenue miss. Focus areas: smaller store rollout, same-store sales, and margin improvements. Management emphasizes cost discipline, simplified menu, and expansion economics. Investment thesis bull case. Portillo's leverages strong regional brand into national growth with smaller prototypes. Achieving margin expansion through higher volumes and digital catering penetration. Bear case. New units underperform, costs escalate, and inflationary pressures erode margins, slowing expansion returns. Key catalysts: next quarterly earnings and guidance updates. Performance of new smaller footprint stores. Catering and loyalty program growth. Unit-level economics in new markets. Insider institutional trading activity.